Hey everyone, welcome back to the Tobin Gregory Group cast. Since this is multiple platforms, we're calling it a cast instead of a podcast or YouTube video or wherever you're consuming the data. Uh, Man, a lot happening in the world, but of course, being mortgage centric and real estate centric, a couple things we want to talk about today. I'm Jake Gregory. I'm one of the hosts. Craig is here with me.
Craig Tobin.
All right, so today I don't want to bore you. This could be one of those topics that can get very detailed and gritty, and we're going to keep it high level and non-boring, but I think it's very important to talk about something called overlays in the mortgage industry because it highly impacts the ease of your loan closing, things that pop up along the way, and things that can derail your mortgage and ultimately cause it not to close, right? So the main thing I want to discuss when you hear a lender saying they don't have overlays, the key thing you can do as a consumer is ask them if they have their Fannie, Freddie, or Ginnie tickets. A ticket is simply something that a lender gets when we have to apply for it. A lender does pay a pretty substantial sum to have these entities come into your business, review files that have closed, and then certify that they will back your closings. What that means for a lender is if we sell a loan to an investor and an investor wants five more things to back the loan, buy the loan, we can ignore it. We just sell it directly to Fannie, Freddie, or Ginnie, and we don't have to meet those guidelines. Now, I've been at some companies in the past that we were told we don't have overlays, and it turned out we didn't have these tickets post closing, which is such a pain. We'd have to go back to consumers to get extra items. And even before closing, during final submissions, when we were looking to place the loan, we'd have investors come back and say, well, we really don't like this. We'd be more comfortable with these three things. Go get them. It caused delays. It caused things to happen that weren't advantageous to the buyer. And it's just as frustrating for a lender to deal with those as it is a consumer. So, number one thing you can do to ensure that you have the smoothest process possible is ask your lender if they have overlays. And if they say no, ask them if they have their Fannie, Freddie, or Ginnie tickets, because that's how you'll tell if they have overlays or not. So with that, Craig, I know you had something else to talk about because also not just the tickets, but also the type of lender you deal with can be important with a smooth transaction as well.
Yeah, so basically what happens is if you go to whether it's a mortgage broker or you go to a mortgage company that is a lender, or if you go to a bank or a credit union, there's different things you have to understand. And I've worked for a bunch of these different, I've worked for brokers, I've worked for banks, and I've worked for mortgage companies. So when you work for a lender that is a bank or a credit union, um, chances are the loan officer you're talking to won't be licensed because they fall under the federal charter and the umbrella of that bank or credit union. So that there's some places you go to, and we're not going to name names. Like I said, I've worked for banks before, where you can go and you get a loan officer that's called the loan officer, and they're not really licensed, so they'll review things and they'll go to the next level loan officer. And then you eventually get to someone that may or may not be licensed. When you're a mortgage company and like where we are now, you have to pass the SAFE Act test. You have to become a licensed loan officer. So chances are we know a lot more about things that you don't even need to worry about, but it's things that will help you in the long run. Because there are things that we understand because we have to study every year continuing education on so that we're in the know. And that way we can help you out when it comes time to doing your mortgage. When you're a direct lender like we are, we have tons of investors that lots of different products. We have it's kind of like walking into a Costco and you could choose from not just peanut M&Ms or plain or whatever. You have a wide variety of things that you can purchase. And that is a nice thing about going to a company that has these options, especially ones that, like what Jake was talking about, when you have your tickets. Not only do you have all these options, but we don't have to worry about things that other companies may have to worry about. Like when you broker a loan, and I've worked for brokers in the past, and sometimes brokers, they're fine, but you're at the mercy of the lender that they're brokering the loan to. When you're a direct lender, we're the ones that close the loan in our names. When you're a broker, you're closing it in the investor's name that you went with. So just make sure you ask a lot of questions, and your licensed loan officer can tell you the differences, like Jake or myself.
Greg, I love it, and a lot of good nuggets there. And I think the reason me and you decided to launch the Tobin Gregory Group with a lender, not a broker, not a bank, is not just the rates, which is a big thing me and you work towards, and making sure that we were uber competitive in any market, not
Yes.
just products and that kind of thing, but consistency. Unlike the Buffalo Bills, which we'll get to in a minute, because I'm sure Craig's chomping at the bit for that. But it's consistency, because when you're at a bank, if they're lending their own money, you not only have to meet the guidelines, but the loan has to also go through the bank's board, which can deny loans. If you work for a broker, like Craig said, you're at the mercy of the lender, and you don't have direct access, which is key to lenders, to the underwriting team, to the processing team. And that's a big deal as well, because when we have questions or something comes up or an underwriter has questions, there's direct communication for your loan officer to go get the loan through, get the loan done, get the questions answered, make sure it's presented in the light that's favorable for a borrower. So there's a lot that goes along between those, and that's a much longer conversation. There's a lot that goes along the lines of broker, lender, and bank, which we'll have that in the future. But let's talk consistency in the Buffalo Bills, because good golly, after we tried that trick play, which we shouldn't have, and it resulted in turning the ball over, I just turned the TV off. I was done.
I, you know, the this is a team that one week we talk on this show about them. They're headed to the Super Bowl. And then they come to Baltimore and the Ravens. I mean, it's the Derrick Henry show. Just give that big boy the ball and watch him stiff arm his way down the field. I mean, I don't even know how you can bet on the Bills week in, week out at this point, because they don't. I mean, they should go after Devontae Adams. I don't think they will, but they should. Um, but not too much on the Bills, because they've never won a Super Bowl. But if we talk about the Dallas Cowboys, who in fact have won many Super Bowls years and years ago, if you all remember last week on the podcast, I did promise you a Cowboys victory, or else I would be giving up my fandom. Well, I think the Cowboys took that to heart, and they absolutely blew out the Giants by 5 points. Um, Awful, just awful. I don't even know what to say. I mean, and I'll tell you right now, I'm not doing that guarantee for at least another 8 weeks anyway, because now they're without Micah Parsons, they're without Demarcus Lawrence. So two Pro Bowl edge rushers. Honestly, I did get a phone call from Jerry Jones last weekend after the games, because he was searching for defensive end. I did play semi-pro football briefly. Um, that was back in 2000, so I'm a little bit out of football shape. But I said, hey, Jerry, look, if you need somebody, and I know you do, to fill in because Parsons is out, I'm your guy. So we'll see if I get that call back or not. I don't know if I will, but we'll find out. I do think that it's going to be an interesting week this week. Eagles are on a bye week this week, which is good for them, because that way they won't give up another 30 points to a team that really shouldn't be doing it. When you have Baker Mayfield as your quarterback, good Lord, that guy is on fire.
Mhm.
More injuries happen this week. More quarterbacks that think they're Tom Brady, like Sam Darnold. I don't understand what's going on in Minnesota. 4-0. Stephen A. Smith put them number one on the power rankings. I mean, there's things that you just can't understand. I took my son to the Jets game this week, and we saw them play the Broncos in New York, and they lost. I I don't even know what to say about that, because Denver might be one of the only teams worse than the Cowboys, and they beat the Jets, who have one of the best defenses, and a future Hall of Famer, Aaron Rodgers.
Mhm.
I just can't even explain what's going on in the NFL anymore. It's kind of like
I
interest
like it.
rates. Like
I like
interest
it.
rates,
Yeah.
what goes up is supposed to go down, and then what goes down goes up. Um, but like interest rates and not being able to figure that out, the NFL is another one of those quandaries. You're like, I just don't get it. I'm sorry,
Hmm.
the Commanders are on fire. Like they just don't lose. So I feel like I'm in the Twilight Zone, or maybe like, Deadpool versus Wolverine or something, and nothing makes sense. It's crazy, man.
I like it. I like this. I like the league, because there's really no I think that right now the teams that have these power rankings and that have been dominant, they're not going to be mid-season. Like I think I think it's a much more level field for every team. Anything could play out to surprise anybody at the end of this year, whether it's Tampa, whether it's the Vikings, whether it's Baltimore. I think Baltimore's got a decent shot. Like you said, with Derrick Henley or with Derrick, with their big running back, and then Henley, right, which is their backup, and he's a speed demon. And with Lamar Jackson, you can't you've got a QB spy, but then you've got to account for two other people that can put the ball in their hands and destroy you. Not just throwing capability and ability to extend plays. So I know they started out a little bit rough this year, but I think they've got a shot. Kansas City, always the team to beat. Doesn't matter who they're
Well,
playing, doesn't matter who's on the field. But I
but
think there's plenty of teams that can beat them right now.
here's what happens. So Kansas City, who also is 4-0, they are now going to play the rest of the year without Rice, their number one wide receiver, who gets taken out by Patrick Mahomes. Mahomes throws an interception. Rice chases the dude down. Mahomes lays them all out and proceeds to tear the ACL of his number one receiver. So who knows what's going on there? Taylor Swift's not going to their games anymore. I mean, you just don't know what's happening in football. It's crazy.
It
It's
is. I love it.
just like the interest rates. I'm
Yep.
telling you.
And so that moves us into a segment, guys. This we're going to start doing state of the rate, which is it's impossible to keep everyone up to date with what's happening with the rates day to day because there's so much movement with MBSs. But starting on today's podcast or cast, we're going to do state of the rate, which is the weekly week, I guess, in review, and then what to expect moving forward if there's any news there. So we want to keep this less than a minute uh, to finish up the segment. But Craig, thought on the rates this week and maybe moving forward.
So my thought on the rates this week is talk to your mortgage guy in the morning and then talk to him an hour later because rates were so volatile this week. I mean, 3 of the days so far, it started out one way and then finished the other way. It's like a true up and down. It's just like, I don't even understand it. And that's the biggest thing is right now you're going to get quotes from another lender. You're going to call up your favorite lender like us and say, hey, I was quoted this. And I'm going to say, what time were you quoted that?
Yeah.
Because if that time was 10 minutes ago, well, guess what? It could be way off. And unless you have a locked interest rate, then you don't have a rate. You have someone just talking about rates. So it's important to know that. Moving forward, as we get closer to the election, you're going to see more uncertainty and more volatility. And what I would tell you is this very briefly, if you're happy with the rate you're given, don't worry if it's going to go up or down, lock it. Just lock it because otherwise you're going to lose it.
That's great information, Craig. And on the back end of that, things to consider. This year, we were supposed to have multiple decreases in rates, and the first decrease we saw from the Fed just happened, and it was a little bit larger than most expected. And if you follow the markets or you're looking to buy a house, you'll realize that the mortgage rates, the MBSs, did not react the way that the Fed did with the decrease. There was also expectation of another decrease before the end of the year. But if you follow the markets, as we're seeing, the Fed is now saying there's not going to be a decrease until the end of or until next year comes along, right? So, like Craig said, super important. If you've got the rate that works and you've got a payment that's comfortable and makes sense for you, lock it because moving forward, we can always refinance to put you in a better position for that. But if not, you've got the best rate you're ever going to have. So, thank you guys for watching. I'm going to let Craig wrap it up, but as he's going to wrap it up, in the bottom of this, if you are a homeowner or you're looking to purchase, we do provide a free tool to show you the wealth in your home, how you can leverage the wealth in your home, the home value that you have, and different options you have to tap into that wealth or even rent out and start making money, buy a second home and more, right? So if that interests you, check the link below for our free tool, no cost to you. Just help you make really good financial and wealth decisions with your home being the key factor of most people's wealth. Greg, what you got, man?
Yeah, I would just say to people, feel free to reach out also if there's certain topics you want to hear about, let us know. We'll be more than happy to talk about it. We're going to have some special guests coming up here on this show as well. But for Jake Gregory, I'm Craig Tobin, and look, hope you guys have a great rest of your week.